Hi, I'm Scott Griffin, currently the Government of Affairs Chair for the State of California Association of Mortgage Professionals and the founder of Scott Griffin Financial.
Scott, what are your thoughts on the CFPB's new rate checker tool? There's a lot of opinion out there, and I'm curious about what yours is.
I agree. I think there's a reason to have an opinion on it. I recently poked my head into it just to see what it is everybody's speaking about, and do you know what I discovered? And something I learned a long time ago in industry, that the moment I mention a number, I create a moment to measure everything next. So the rate checker, all of a sudden by putting basic information, where do I live? Am I buying? Am I refinancing? What do I think my credit score is? How much money do I want to borrow? Very basic questions trigger the machine to give an answer. And the answer is a number, but it didn't ask enough questions. So the number that gets presented is a very generalized number, and the consumer's unknowing. They're really just a consumer, aren't they? They're really not a mortgage professional that knows that, yes, I am buying a condominium, but how many stories is the condominium? There's loan level price adjustments that show up in the loans that we produce, and it's got to be based on different measures of risk. Now, these measures of risk that I must measure when I'm underwriting and packaging a loan is not being even asked within the rate checker itself. Therefore, its production of the number it's offering is not based on enough information, therefore allowing a big opportunity of disappointment. And so if that borrower thought they had that 760 credit score, and instead it was 710, and let's say that that borrower did get a condominium, but the system didn't say it was 6 stories tall, and it delivered a number, and now they reach out to me and I have to price in all of the risk level adjustments. My number is quite different than that number. And it looks almost as if I could be gouging that consumer, or that consumer could feel unsafe in working with me because they verified. This is an enforcement agency. I have a problem with that. I have a problem with an enforcement agency also taking on the role of a mortgage professional by delivering and discussing rates. We already have tools online for those consumers that desire to look into deeper rates. Bank rate. Gosh, Google is an incredible tool to get basic information. I believe the market itself creates its own competition, and I marry that along with some of that compliance we spoke of earlier. Let one of those be the qualified mortgage rule. So when a consumer gets a qualified mortgage, they already know the loan being delivered to them already fits the guidelines, so they know that they're not going to overpay. They know that the guidelines that are set to create a qualified mortgage really speak to the cost and the rate that gets delivered to the consumer. So isn't there already protection living in the way that loans are designed and delivered to clients since January 10th of last year? And isn't that enough protection and enough upsetting moments that we as a whole society have to understand before we continue to put layers of change on top of it? Most people don't even know there's a qualified mortgage to be aware of. So that's designed to protect them. And I feel the tools that are designed to speak for the consumer, to the consumer, are in place.